is certainly trading with a fair degree of weakness. IT, remember, at the start of the trading day itself, from being up 2.44%, had succumbed to about 1.5. It's now about 0.56. So the week, which was maybe started off with a bang as well, is kind of ending with a bit of a whimper, if you will. Bring up the market breadth very quickly before I get to the heat map and just see what the overall mood is, because remember, mid caps and small caps have been sulking for the last 2 days, but in today's session the breadth is still slightly positive. We'll take this with both hands. Portfolios must be happy. Bring up the heat map. You will see some bit of banking stocks and a lot of economy facing stocks today. Actually, it's disparate because you look at the losing list here, right? So HDFC Bank and Kotak Bank, two heavyweights down in the red, but there's also Larsen, Airtel, Power Grid. So a clutch of these names have not done all that well. I think the weightage of the Nifty Bank is leading to the index being flat, because otherwise the quantum of green is much higher. Oil marketing companies, BP, HP, IOC, all of them, splendid move. Has to be on account of the fact that oil prices have come off. So BPCL a splendid 6.5%. But pharmaceuticals is giving company, and metals continue to rise and shine. Also Reliance giving out a helping hand. So net, non-banks, a clutch of other sectors participating on the upside. But Agam, the good part might be that portfolios might be a little bit happier today relative to the last couple of days.
They certainly will, Niraj, because we are still trading near life highs, at least as far as the benchmarks are concerned. A little bit on outperformance as far as your broader markets go too. And, in terms of the way sectors are moving, of course, we have that return in strength when it comes to the oil and gas space specifically. We're looking at gains in energy and communications. Energy specifically, we're going to talk about a little later on in the show as well. But let's talk about the broader markets, because that slight bit of outperformance that I was talking about, the mid-cap index is marginally in the green, the small-cap index is also currently trending higher, and we continue to see that swift up move as far as these benchmarks are concerned as well when it comes to the broader markets. That said, let's take a look at some of the specific stocks that we have on our radar. And right at the top, of course, Niraj mentioned the pharmaceutical sector. So we have two newsmakers here. We have Sequence Scientific, which is up as much as 14%, and a good 5% up move on Newland Laboratories as well. Some very pertinent updates coming in. Individual updates from both these companies, and hence you're seeing a lot of strength here. In terms of brokerage radar, there's yet another pharma company in focus, but this is for the negative. Goldman Sachs has in fact put out a negative rating as far as Gland Pharma is concerned. On the other hand, of course, the other stock which is in focus is Westlife Development. And that's where we're seeing an up move there. Again, it is Goldman Sachs, but looking at positively out here. As we move on, we also have focus on the sugar sector. So, of course, two of the main stocks which are seeing a substantial rise is Sri Renuka Sugars up around 11% and Balrampur Chini up around nearly 7%. Both of these companies were a part of the Nifty 500 as well. And finally, a sector which is starting to look up ever so slightly after a long period of consolidation and a little bit of weakness as well is the battery maker. So both Amara Raja batteries as well as Exide advancing by 4.5% and 5% each. So plenty of counters out there in the broader markets, and more gainers and losers also on account of developments out there, Niraj.
Okay, well, let's talk of what to do in a scenario like this. First, the technicals. Kunal Ramya with us on the show to talk about that. But in moments from now, UR Bhatt would be with us as well, because it's been a long time that we've spoken to him, so it'll be good to connect with him as well. But Kunal, let me start off with you first. And with the Nifty call, should one buy or sell the Nifty right now?
Good afternoon, Niraj bhai. Good afternoon to all our viewers. So if you look at the Nifty, yes, last week on Friday itself, we were discussing about Nifty crossing all-time high. And I also mentioned that level seems to be, a cautious level, because the risk-reward ratio was very unfavorable. And see how the judgment went absolutely wrong, because the markets were in trending mode. Nifty continued going up. But now look at the Bank Nifty, wherever it was closed on Friday, we are back to the same level again. Now, this is what is giving me a comfort. That's time correction. Nifty, I would avoid again, because it's just a trending move. So if someone wants to play, then with the stop loss of, I think, 26,000, which is around 200 points away from the CMP, one can initiate a buy on Nifty. Nifty. But when it comes to Bank Nifty, now it's giving me that comfort of initiating trade. From here, if Bank Nifty continues to rally, so with the stop loss of just 200 points on Bank Nifty, one can initiate a trade. So indices view, I'm getting a lot of comfort now on the Bank Nifty front compared to Nifty front.
Why don't you tell us about your stock picks today, Kunal, and what you find interesting?
So, hi, Agam. So, first counter which I like the most at this point in time is, of course, Reliance, the big boy. The counter has started moving after a long bit of consolidation, and counter is offering very good risk-reward ratio because it's just started from the support level itself. So, with the stop loss of, I think, around 3010, one can initiate a buy. The first target is 3100, followed by 3150. Now, these are the positional targets which I'm sharing. And the second counter is Canara Bank, which I again like the most at this point in time. This counter is coming out of broader consolidation after a good, price correction also. So with the stop loss of 105, the first target can be 120. And as the counter reaches near the target level, we can trail the stop loss and keep the next target as 140 to 145.
Okay, you could argue that there are two sectors of the day, one which I highlighted, one which Agam did. So pharma and oil and gas. And Mr. U.R. Bhatt is with us. Mr. Bhatt, great having you. It's been a while. Thanks for joining in. What do you make of, or rather, what is it that you would be doing in a scenario like this, Mr. Bhatt? Are you putting in fresh money to work, or are you biding your time and waiting for a correction?
Well, I think one can't be completely dissociated from the market if you're an investor. So you have to be invested. But you can probably change, you can shift sectors, you can go to large cap or from mid cap, from small cap, when you think that there is a bit more of uncertainty than usual. And that is the position today because the oil prices have come down. So therefore, there is quite some enthusiasm because India is a very big importer of oil and oil marketing companies are giving a good return over the day. But the point is that there is really a lot of tension building up in Lebanon, and we really don't know how this will shape up. And even on the Ukraine front, I think things are getting from bad to worse. Nuclear option is also being talked about. So all these things don't point to a great sort of environment for risk taking. So while of course India is going to be the beneficiary of any risk on. Largely consequent to the cut in interest rates in the US and an expectation of a cut in interest rates in India too. But that I think is for the short term. But for the medium term, we really have to see how the developments on the war front go ahead, because that I think can have a huge influence on FPI flows, on state of the market, and on the confidence of retail investors also as far as markets are concerned.
Mr. Bhatt, we've been talking about sector rotation, but the other aspect that a lot of investors are talking about is rotation from broader markets to larger cap stocks. What's your opinion, and is there a huge differential between the two that there could perhaps be taken advantage of?
Absolutely. I think there are quite a lot of mid and small cap stocks, which, as the saying goes, the price to sainthood. So I don't know whether one can really hold on to these stocks and be confident that you can weather the storm. So I think those investors who want to be invested, they probably are better off shifting to the large cap stocks, where the impact of any event may not be as much as the mid and small cap stock, because those, at least some of them, are priced to beyond perfection. So therefore, I think it's a very good trade to get out of the very highly priced mid and small cap stocks and shift towards large cap stocks. I think that is probably what the market also has been seeing over the last few days.
Mm-hmm. Okay. Well, that's the word on markets at large. So like we said, the two pockets, Mr. Bhatt, the first pocket is oil marketing companies. Now, oil coming off is clearly a constructive note for these names. They are duly reacting in the session today. BP, HPRC, all three of them doing very well. What do you do here? Are you a buyer into OMCs, or could there be a pullback into these names if indeed we see a price cut in the run-up to the elections?
Well, I don't know whether a price cut is warranted because I think all these companies have sacrificed a lot when oil prices are going up. But in the run-up to the election, generally there is some tension about prices. So if there is a cut also, given the fact that oil prices have come down quite reasonably, I think a small cut is certainly par for the course because they can absorb it quite well. They have to pass on some of the savings that they have made in terms of importing cheaper oil. But I don't know whether a large cut is in the offing. If a large cut is there in the offing, much beyond what the oil price correction demands, I think there is room for caution.
Mm-hmm. All right. Well, with that, let's take a look at the pharmaceutical sector specifically right now, because that's also something that we are taking stock of, not just today because we have two positive developments from two pharmaceutical companies, but in general, we've seen a lot of notes coming in, well, more positive than negative, certainly not only positive, but well, in today's day of trade, we're seeing gains in Sun Pharma, Natco Pharma, and a whole host of companies. But we'll talk about two stocks specifically, and for that we have Varsha, who's joining us to give us an update on why these stocks are buzzing today. Well, Varsha, over to you.
Well, thanks, Agam, for that. So if you see Cipla and Sun Pharma is buzzing, this is on the back of UBS note, which has been positive on both the stocks. But today, the two stocks I'll be highlighting, starting with Newland Lab, wherein the company is buzzing on the back of US FDA approved Bristol Myers drug, which is used to treat mental disorders. The name of the drug is CAR-XT, which is a drug developed by Karuna Therapeutics, which is owned by BMS. Now, why Newland has been buzzing is because Newland has been partnered with Karuna Therapeutics since CAR-XT's phase 3 trial in 2019. Now, BMS bought Karuna in Q3 FY24 for almost $14 billion, and BMS has a marketing exclusivity right for CAR-XT for 5 years and a patent period that's much more longer. Now, according to analysts, the drug has a sales potential during the patent period ranging from $7 to $10 billion, and the FDA approval was based on the data from two studies which shows that the drug was actually effective when it comes to meaningful reduction in the symptoms. Now, the Q3 FY25 will be a huge when it comes to Newland Lab for their CDMO business per se, as CAR-XT will be launched by the BMS. Now, let's see what Goldman Sachs has to say about this. So, the FDA approval, according to Goldman Sachs, is a key event and which forms a significant part of growth and margin expansion thesis from FY26 and beyond. The next stock on my radar is Sequence Scientific, which is buzzing. Now, this is on the back of the announcement of merger with Viyash Life Sciences. Now, each shareholder of Viyash Life Sciences to receive 56 equity shares of Sequence Scientific for every 100 shares held by them. Now, the proposed merger is expected to be EBITDA margin accretive, and this will deleverage Sequence balance sheet. Now, let's see what are the positives of this merger. So, the combined entity will have almost 16 manufacturing plants, out of which 10 are US FDA approved, and the combined entity will have 5x higher manufacturing capacity. Now, the revenue and EBITDA, they are targeting to double their revenue and EBITDA under the merged entity with improved margin at almost 14.6%. And the net debt to TTM EBITDA is expected to improve at 1.5x. Now, this merger will accelerate new product development, will improve cost competitiveness for Sequent as a whole. Now, just a little bit overview about Viyash Life Sciences, which is an integrated pharmaceutical company with presence across formulations and API and advanced intermediates. Now, they have got robust pipeline of fast-growing market considering oncology, which forms almost and which has 40% of molecules have a market size of $1 billion. Now, they also have marquee customer profiles and cater to 5 large pharma companies. Also, if you see the financial aspects when it comes to Viyash, they have delivered almost 35% revenue CAGR in last 4 years with 100% EBITDA again in last 4 years, and they have highest DMF filings among Indian peers when it comes to Q1 FY25, and they have also got 9 US FDA approvals.
Wow, that's a comprehensive view into what is really triggering the returns for some of these stocks. Thanks for that, Varsha. Kunal, check with you first on on a Sequent or a Newland or a Sun, all of which are doing reasonably okay. Is there a trade in any of these?
See, Niraj bhai, again, these all counters have been trending counters for the entire year of 23 and 24. If we just look at Sequent Scientific, somewhere in 2024 June, this counter was at 95 and now it's at 220 levels. Still, the trend is continuing. But I think there is a lot of room for upside on Sequent Scientific compared to other counters. Only reason being, the previous highs of 2021 on Sequent was around 310. I think with this move, the volumes which we are witnessing today is highest ever noticed in this entire year. So buy on dip can be a good strategy. Somewhere near to 210 can be a good level to initiate a buy. With the positional stop loss of I think 200, the targets can be 310 on Sequent. I will not be really keen to accumulate Newland because in spite of this positive announcement, the counter is still in sideways consolidation. So we'll avoid for now. I think Sequent Scientific can be a better play for our viewers.
Okay. Mr. Bhatt, are you enthused by pharma, the Biosecure Act, West moving to East, then a clutch of other things, while there are speed bumps on the US FDA side? But are you enthused by pharmaceuticals?
Generally, I think, we are one of the big exporters of pharma to the US. And again, I think the largest topic being, you have always, you have been talking about an imminent pandemic, possible mpox and the like. So therefore, there will be certainly some which have vaccines for these, or which have other medicines which can treat these diseases. So therefore, I think there is a lot of expectation that if there is a pandemic, these companies can do well. Some of them, some of the companies. In addition, of course, you always have this company specific some approvals here and there, where I think if you closely follow, there may be some opportunities. But otherwise, I think this is the defensive sector. One needs to be invested in this sector. Specific stocks, I think it's based on news flow.
Well, there you have it. That's the view coming in on the pharmaceutical space. So, Mr. Bhatt, on that note, thanking you for joining us and taking us through your views on the markets right now. Of course, certainly challenging times, especially when these markets are currently trending at heady valuations and as well as life highs. But we move on to the brokerage call of the day, and that's Goldman Sachs on Westlife Development. As I was talking about just a while earlier, we now have Mahima who's joining us to give us what that note is suggesting on this particular QSR company. Mahima, over to you.
Right, so Goldman Sachs did come out with a note today on Westlife Food, as you rightly mentioned, and has given a buy rating with a target price of 1075. Now, they've upgraded to buy for Westlife Food, and on the back of this, the stock did touch an intraday high of 9.16%, and volumes are trading at 27 times its 30-day average, which is not a very normal day for Westlife Food. Now, what the note is saying is that Goldman Sachs believes that the addition of McCrispy platform makes McDonald's India's menu offering more diverse, and this will attract more consumers, and it will also add excitement to the overall portfolio of the McDonald's menu. The platform will act as a catalyst to attract new consumers and increase frequency of existing consumers, and McDonald's has increased its efforts on strengthening its value offering in recent quarters, and these key initiatives have been their extra value meals, their entry-level chicken burger, as well as the McSavers 1+1. And aside from this, the lingering impact of overall external geopolitical issues are kind of way behind for Westlife Food, is what the brokerage is saying, and management has already started seeing some green shoots driven by launch of these value meals. Lastly, they believe that strengthening of the value platform and improving footfalls will also create opportunities for overall upgrading the consumers. So this is the overall view of what Goldman Sachs has to say about Westlife Foods.
Right, Mahima, thank you so much for getting us that update on Westlife Development. But with that, we have yet another expert joining us, and that's Niraj Diwan. He's the independent market expert who's joining us at the moment. Good afternoon to you, Niraj, and thanks for joining in. We were talking about QSR right now in the entire space. We're starting to see a little bit of a run, not just in names like Westlife Development, but also Devyani International, to a certain extent, Jubilant Foodworks. Is this just a catch-up that these names are playing with respect to the other broader market names, or is there a genuine wave and perhaps an expectation of improvement when it comes to demand going forward?
Yeah, good afternoon. Thanks for having me on the show. Yeah, of course, one reason can be the catch-up also, because they've not performed like the broader market has performed. But otherwise, demand-wise, these companies, whether Westlife, Jubilant, they are mature businesses. They are growing at a particular X rate, and they're not really growing exponentially. So you can see a 5-7% movement, or if there's something new which happens, and some new range getting coming out, there can be some pop up here and there. But generally speaking, they will grow. And but the other part can be the inflation impact also. There can be a possibility that because of the monsoon being good, and the inflation, food inflation can also come down a bit, and that can also improve the margins for these businesses. And the third part can be, like you said, some demand pickup can happen because festival season is undergoing and going ahead also. Festival season is coming. So, down the line from now till December, January, with the New Year impact and Christmas impact, and especially North, you get these festivities. So that can also have an impact on these businesses. So there can be 2-3 points which can really impact the business in the shorter term also.
Well, okay. By the way, that's on some of these QSRs. The other aspect is IT. While it's come off today, Chinese tech stocks seem to be rallying, and our tech stocks aren't quite flying. So China is now having a real rally across its markets and across individual pockets. In our case, it's been a bit sedate today relative to how they started off. Niraj, you saw the Accenture numbers. Did they excite you enough to go out and change your call on IT if you indeed were negative earlier? I don't know if you were negative or not, of course.
Actually, I've been a little positive also on IT. Earlier also we've seen a decent rally, then some consolidation was happening. Post-interest rate cut, we saw some cut in IT names. I thought that they're consolidating, and after this correction, they should have an up move. Accenture numbers are also better than what the street was expecting, though still they are in the range of 4 to 6% kind of an increase, which I think they delivered also, if I'm not wrong, 4 to 5% over last year. So they think that the momentum can continue, can be slightly better. So they're also not giving a very large estimate of growth. So, but it's definitely constructive for the IT space. So, and like you rightly said that, because of what has happened in China, a lot of money flow from FIs can go to China also now. So they feel valuation comfort as compared to India, maybe a little more there. So I think, but going ahead, I think if one is a little long-term perspective, one has a little long-term perspective, I think IT still has juice and still give you return over the next one.
Well, the stocks mixed back. Kunal, a bit of a disappointing market action today in large cap IT. What did you make of this? And if somebody was, let's say, holding a long call on any of the IT names, would you recommend squaring it off, or would you recommend staying long? Not just HCL Tech, which is the best gainer, but some of the others like Mphasis or TCS or Infosys.
So Niraj bhai, if you look at the overall trend of IT counters from May till now, the trend is absolutely positive. Yes, there has been sideways consolidation movement since a month. I think August was the month, end of August, we saw the sideways momentum continuing. So if someone is holding on to the position, I think for the next month also, we might not see the price correction coming in, but I think time correction is definitely likely to come in looking at the today's price action. So, someone wants to really play along with the positions. What we have done for next 10 to 15 days is creating the short straddle and holding on to the position, because we are trend followers. And for us, if the trend is positive, there is no problem holding on to the position. I think sideways consolidation is likely. So I'm not turning bearish, but I'm expecting, the price correction. I'm expecting time correction over price correction. So yes, sideways consolidation is likely. Someone is holding the position, short-term view, definitely take an exit. But if you are a positional holder, you can play with the options against your position and make something out of it.
All right. Well, hold that thought. Well, let's get SpiceJet in, because that's been in the news for a while now, and the stock has underperformed Sensex, and it spears largely for the year-to-date period. We spoke to CMD Ajay Singh about the low-cost carriers' revival plans, as well as much more in terms of what it has in store for its future. Listen in as we move into a short break, and we'll be back in just a bit.
Well, the primary use of the raise is to increase capacity, go from the current 25 aircraft that SpiceJet is flying back to a 100 aircraft airline in the next 2 years. That's the primary objective of the race. We were already close to 100 aircraft airline in 2019, and it is our intention to get back to being a 100 aircraft airline over the next 2 years. That's the primary objective. Of course, another objective of the race is to clean up the balance sheet, clear up whatever is due and payable, settle with all our partners who are owed money primarily for the period when aircraft are not flying during COVID and during the grounding of the MAX aircraft in 2019 and for 3 years thereupon. So the idea is that we clean up our balance sheet, restructure all existing liabilities, and have the space and the strength to quickly grow back into being a 100 aircraft airline in a market which is absolutely booming, and where only of the population of 140 crore people today, 5 or 6 crore Indians fly. So SpiceJet knows how to do this. SpiceJet has been an airline which has been around the last 18, 19 years. We've flown with very high occupancy, with a great deal of success. We've brought about a turnaround in 2015, which was most unexpected and the envy of many. We feel that we are in a better position.
Welcome back. This is India Market Close. We have Agam Investment and Madhusudan Kela, who are set to acquire nearly 47% stake in Pratap Snacks for nearly 850 crore rupees. And the company has also announced an open offer to purchase an additional 26% stake from the public at 864 rupees per share with an 18% discount to the current market price. What's really driving the discount here? Let's take a look. We have Mahima joining us to give us an idea.
New takers for Pratap Snacks, as you rightly mentioned. Agam Investment and Madhusudan Kela are set to buy almost 47% in Pratap Snacks, and this will also trigger an open offer for around 26%. And they'll buying this from Peak Partners and Sequoia Capital, and this is for 846 crore, and this is being bought at 746, which is at a discount of 29% from its yesterday's closing price. Now let's take a look at what is behind this open offer completely. Now the open offer will buy the remaining 26% stake from public, and this is at a price of 864 per share, which is at an 18% discount again. And if we check the trajectory of the company, the share was listed at a price of roughly 938, and since then also it's been a long time for Pratap Snacks, and it's being sold at 746 at such a huge discount. Let's check as to why this is happening in terms of financial performance. If we check the revenue, 7-year revenue CAGR has just been 9%. In terms of net profit, the CAGR has been 13%, and margins have just hardly expanded from that 5% to the 9% mark. In terms of the operational metrics overall, if we see, debtor days have declined from 6 to 2. The inventory days have increased in the past 7 years from 46 to 48. Payable days have gone down just by 3 days, and working capital days has been significantly increased by 4 to that 28 days. And lastly, ROCE has not improved much, just gone by from 7% to 11% in the past 7 years. In terms of shareholding pattern also, if we see, promoters have diluted the stake, FII has not changed much, and DIIs have also diluted the stake, and overall public shareholding has been increased. Lastly, in terms of stock performance, 6 months up 12%, YTD down 5%, 5 years the stock is just given a return of roughly 16.5%. So this is the overall view of Pratap Snacks and what is happening with the company.
Right, Mahima, thanks so much for joining us and taking us through that very interesting change of hands when it comes to that particular company. A relatively smaller one of those consumption names in the fast-moving consumer goods space. But let me take up the entire sector with Niraj. Niraj, what do you make of this? And while we haven't seen as much movement in a whole host of these, FMCG companies, there is always that hope and some positive traction in terms of commentary with rural green shoots coming through. Your overall view on the sector, and whether or not you do in fact find opportunities in the FMCG sector at the moment?
Yeah, FMCG as a sector, definitely, there are opportunities always. That's a huge sector. But especially to talk about these, Pratap Snack kind of companies which are into these, snacks and packaged chips and all those things. I think they're very price sensitive. There's a lot of competition. There's some local players like Pratap, maybe they're in, some, like Rajasthan and that area, and maybe your Gopal maybe in some other area. So there's Bikaner, which is operating in a local area, which they're doing very well. But then there's a lot of competition for these, and inflation impact is huge in them. They can't really increase the prices so easily because of competition. So that's why I think the margins are not very great in these companies. Even like you were showing the ROC from Pratap has also been just at 11%, which is also pretty low as if you compare to FMCG companies. So, these companies definitely have, if you buy them at a cheap, valuation, you're getting them cheap, then it's fine. You can have a long-term view. But, after the run-up, and, this deal is also happening at an 18% discount, I don't think there's any point, chasing it once, the valuations are not that reasonable. And as far as FMCG is concerned, there's ITC is there, which is doing well, and still valuation-wise, you have the comfort. So you can go for some large cap names which still have some comfort. Though, ITC may not have moved that much, but if you look at Hindustan Lever or, Britannia, those companies, the last 2-3 months, they've also moved up about 15-20%. So you've seen some movement happening in the last 2-3 months. So, one has to be very selective there also.
Okay. Well, that's on FMCG. The other sector, as we've discussed, is IT. Now, we know the news around Accenture. What we don't know is, or what may not entirely know, even though we've spoken about during the whole day today, is what the brokerage view has been on the Indian IT sector after what Accenture has done. So, Rucha Johnson to talk about precisely that. Rucha, good afternoon. Are brokerages enthused or is it ho-hum?
So it's a positive read-through for Indian IT companies is what most brokerages are saying. Well, the discretionary demand is reviving, but the brokerages say that it is not completely covered up. But Nomura, in fact, says that it will take a few more quarters for discretionary demand to revive completely. But deterioration is very unlikely in such a case. Now, let's talk about the stock calls. Well, Goldman Sachs have a buy rating on Infosys because it believes that this would be the stock which would benefit the most in case there is a revival in discretionary demand in the next year. It is bullish on TCS as well with a buy rating because in terms of valuations, TCS is trading at a lower premium to the sector versus its own history. However, Wipro has a kind of mixed outlook. Goldman Sachs has a sell rating on Wipro. However, Nomura has a buy rating on Wipro. And in addition to Wipro, Nomura has a buy rating on Infosys as well. And in terms of mid-cap names, it has a buy rating on Cognizant and Eclipse, but a reduced rating on LTIMindtree, Emphasis and LTTS. But again, coming back to the demand environment, well, these brokerages say that some of the key positives that, help the demand to improve are the US Fed rate cuts, and also they expect a potential easing of decision making after the US elections. So this calendar year would be critical for demand revival in the Indian IT companies, but yes, not a deterioration for sure is what brokerages are saying.
Okay, not a deterioration. Thanks a lot for that, Rucha. Niraj Devan, does not a deterioration point make Indian IT attractive, or are there better options out there?
No, I think IT also, if one can have this in the portfolio because you saw some underperformance earlier, but last, of course, couple of months, they have come up from the bottom that we saw. I think, but looking at the US interest rate cuts and, demand can pick up from there. I think IT is one sector which next 1 year can give you market performer return. So I think it should be part of the portfolio and one should be looking at opportunities there.
All right. Well, you know what? Let's also take a very quick look at how some of these individual names in the IT sector are moving. What we're actually seeing is that, there's always been this mixed movement and a diversion of trends when it comes to names like TCS and Infosys on one side. And then we have a lot more volatility in names like Wipro, as well as perhaps something like, even an HCL Technologies to a certain extent. And I'm talking about just the large cap names here. Kunal, let me pose this question to you here. Anything that looks interesting among these top 4 names, and is there a potential opportunity to go long or short at these levels?
Agam, as we discussed in the beginning itself, these counters are near to the resistance level itself, and also we have witnessed a sideways consolidation. Now, in the morning show, we have discussed, those option strategies multiple times. The one which I can suggest right now is by looking at Wipro chart. The counter is not crossing 560 mark on the higher side, and on the lower side, we have a strong support near 530. I think that can be a good strangle which one can create with long futures near 530. So long on futures at 530 and, strangle with 530 and 560 levels. If the counter manages to remain between these two levels for at least 15 days, I think that can be a good income for the long. And also the trend is positive. So there is no point in going short also. So futures can help us to, protect the upside, and the downside stop loss can be 520 for the entire strategy. I think that can be good for now, but trend is definitely positive. If someone wants to stay invested, that's the sector to stay invested. If there is a correction and someone wants to accumulate, I think that can offer better risk reward ratio also. And for traders, as we just discussed, the strategy can also be created.
Well, sure, Kunal, but we'll just shift focus slightly more towards the hardware, scope of things. And of course, semiconductors is that big buzzword, right? So we have Tata Electronics, which partners with Taiwan's PSMC to launch India's first AI-enabled semiconductor fab in Gujarat. And my colleague Shubhana Sheikh caught up with N. Chandrasekharan, who's the chairman of Tata Sons, talking about how semiconductors will take over the future and more. Listen in to a slice of that exclusive conversation.
Now we have an opportunity to build a very strong fab, which we are going to do it in Dholera, which will, to start with, will have 5 different technologies from 28 nanometers to 110 nanometers. And we are extremely delighted that our partner, Frank, chose to work with us, chose to work with India first and chose to work with us because they have options. And we have moved very fast and they have been extremely supportive. I think this will be one of the fastest time scales in which this kind of an arrangement and agreement has been made globally.
Well, that's the big voice today on NDTV Profit. Actually, it's been a clutch of very big voices as well today on the show. Now, some stocks which we need to mark in the session today, because these are large caps which have just started to move off the move from where they were. So if you look at NTPC, Pfizer, Bharti Hexacom, I think the intradays look pretty interesting for most of them. It's a pocket which is, anyways, large caps are doing well. And within that, these are the stocks that need to be highlighted. Kunal, anything on the charts for any of these three?
Niraj, I saw NTPC when you just mentioned. It's again, I'm not tracking it regularly because it's again a trending counter. So trailing stop loss for now is around 425. But for someone who wants to create a new position, I will again say, let's just wait for the counter to come down, because in a trending counter, we generally buy when there is a new higher bottom created rather than breakout. So I think a 430 can be a good level to initiate by. Stop loss in that case can be 420 and hold the position till the time trend continues. But no new position at this point in time on any of these counters.
It's cooled off a little bit as NTPC, but Bharti Hexacom had a serious move as well, and that could be the other interesting one to just keep it at. 6.5% higher now, 1524. Niraj Diwan, almost everybody says that if there is one telecom stock that could anyways benefit, it could be Hexacom, spiking up as we speak. Do you like the business?
Yeah, I think as far as telecom is concerned, a pure play would be only Bharti Airtel and Bharti Hexacom. So, of course, if one needs to be in this sector, this is the stock which is there. But definitely, I agree that these stocks have been favorites and then run up a lot. So there's no point chasing them if one is buying for a little longer term. You'll get your opportunities, but definitely this should be one stock in your portfolio if you want to add telecom.
Caps are moving because there is Bharti Hexacom, like I said, then there is Pfizer, there is Coal India. A clutch of these large caps have done really well. 7% up for Hexacom. Pfizer is up about 8%, so some sharp spikes there. Coal India up about 1.9%. Bring up the Nifty 50 intraday just a minute before we get to yet another very interesting story. But just bring up the Nifty. The index isn't quite doing well. So it's not that the heavyweights have moved, but some individual names certainly moving around. Trent, just want to mark that because it's supposedly going to get a large inflow today. And a lot of people believe it comes in the second half. A bit of a spike, but just kind of flattening out. Okay, what's not done well today is Zomato. Now, Swiggy filing an updated DRHP for the 10,000 crore IPO valuation, and which leads to the valuation at about 83,700 crores of the food delivery company. How does that fare against the listed peer Zomato? Well, Agam is here as well. And Agam, it's an interesting combination. Like you mentioned the other day about whether NSE is driving BSE or vice versa. Would Swiggy be driving Zomato or vice versa?
That's likely the case right now because we've actually seen a little bit of weakening in the share prices of Zomato over the last 3 to 4 days. But let's talk about Swiggy and perhaps we can get a better perspective of what impact it can potentially have on Zomato going forward. So over the last, firstly, of course, the DRHP for Swiggy's IPO has been filed with the NSE now, with the SEBI now. So with that, the last handful of transactions that have happened between investors have come through between 330 to 300 375 rupees per share. And based on that and the information that we have from the DRHP, well, the valuation comes to a little less than $10 billion or around 83,000, 84,000 crore rupees at around, of course, 375 rupees per share. Swiggy is looking to raise about 10,700 crore rupees, of which about nearly 7,000 crore rupees will be in OFS, and the balance near 3,800 crore rupees will be your fresh issue. Now, when it comes to valuations, pitched against Zomato, and this is where things get a little bit interesting. If you consider 85,000 crores as the valuation for Swiggy and 250,000 crores as the valuation, that is the market cap for Zomato, and you take the price to sales ratio, Swiggy will come in at around 7.6 times against Zomato's 20.6 times. Many of you will potentially suggest that that's obvious because Zomato is a listed company. But, there's another reason why we are looking at this very wide gulf between Swiggy and Zomato. And that reason, of course, is that Zomato is now becoming a little bit more consistent when it comes to profitability. Swiggy, on the other hand, is still on the road to that. So it's still loss-making, and it does need to cover up quite a bit before it, in fact, becomes profitable on the bottom line end. And based on that, what we are seeing is, sure, this gap is wide. But don't forget that recently Zomato has also run up significantly and, in fact, moved near to the levels of around 300 rupees per share. And that is the other reason why we're seeing this wide gulf. And hence that, begs the question for a lot of investors may start thinking that are we paying a little too much for Zomato at this point in time, given the kind of valuation that Swiggy is going in currently, notwithstanding the unlisted discount. But moving in, as far as Swiggy is concerned, there is a lot of promising, prospects coming through. Where the management has suggested about 18 to 20% growth year on year in the food delivery business, which is expected to be driven by new customer additions, and even its grocery business is expected to grow at 60%, albeit on a low base. Finally, let's talk about a handful of pre-IPO risks. Firstly, if there is a risk, listing delay, that always doesn't really bode well with sentiment in general. An overall downturn in the markets will also potentially lead to, the valuations of Swiggy coming off as well. And let's not forget the 6-month lock-in period, which means that if you do, in fact, go ahead and purchase those shares before the IPO comes through, you will not be able to sell those shares on the day of its listing. In fact, only after 6 months of listing of Swiggy. So these are some of the pre-IPO risks that you need to bear in mind. But again, a wait and watch as to what kind of repercussions we see on Zomato. And also, we still are a bit away from Swiggy's IPO. So it's not necessary that the IPO happens at 375. It could happen at a lower or a higher valuation. And that could potentially lead to some changes in Zomato as well.
Wow. Thanks for that. Niraj Diwan, are you a buyer in Zomato or are you staying on the sidelines?
No, I think Zomato is a buy on dips because the way they've improved the performance, they are now focusing on profitability. Blinkit is growing very fast and it is really doing very well. I think if you get any dip in Zomato, there's definitely be a buying opportunity currently.
Okay, it's 3:20, that time of the show. We're going to take in the BTST ideas. Kunal Rambia, your top closing strategy, BTST or STBT?
So Niraj bhai, not actually BTST, but yeah, something which is very interesting just come up on the screen is IREDA. Now this is a positional trade which I'm sharing. This counter has shown us the 2 months of downtrend and in fact 30% correction, and now it's showing the breakout. The last 15-20 minutes, the counter has shoot up from 223, 224 levels to 230 levels. Now that's massive with good volumes. I think this is a complete turnaround and the continuation of the original trend. So with the stop loss of 220, one can initiate a buy and the targets can be 275. Now this is very positional target which I'm sharing. That's first counter. And the second counter which I like the most and which you already highlighted is IOC. Again, well poised and giving good consolidation breakout. I think with the stop loss of 170, one can initiate a buy and the targets can be 200 to 205. Now these two counters are for next 15 to 20 days. One can keep trailing the stop loss and hold the position then.
All right. Well, it does seem like we are looking at a trend coming off from day's highs. It's made a new lifetime high on an intraday basis, but it doesn't seem like it's going to make a closing high. Kunal, your view on trend, because there's no stopping this counter, is there?
Absolutely, Agam, this counter is looking very attractive. Actually, already Niraj bhai highlighted that time I was watching it. It's a trending counter, undoubtedly very strong. But these trending counters, as I always say, rather than chasing at the higher levels, if someone is already holding, trail the stop loss. As of now, I think the good support level is 7,550. I think that can be a good support to keep trailing the stop loss and hold by any chance. If someone wants to initiate a trade and if the counter manages to come down near the support level, one can think over it. But otherwise, at this point in time, I'll avoid, creating new positions because of unfavorable risk-reward ratio.
All right. Well, towards this end of this trading week, also want to mark what's happening with some of your electronic manufacturing services companies. So let's pull up something like a Dixon Technologies. Let's pull up something like a Keynes Tech and even Surma for that matter. So Keynes Tech is up around 1.3% for now, but Surma is down around 2.3%. Dixon Tech, let's take a look at where that one is currently trading at. It's at around 14,000 rupees per share. So, taking all these factors into consideration, and it does seem like these companies have gone into a consolidation now. Niraj, if you can come in on a handful of these names, which prima facie look very expensive at the moment. I'm not entirely certain what your assessment is. So what is your opinion here?
Yeah, we're looking at two companies which we invested also. One is Dixon and the other one is PG Electroplast. So these two companies, they have been doing very well. The performance year-on-year, quarter-on-quarter, year-on-year has been very good as far as the profitability is concerned. Though there will be, there will be duration where you'll feel valuation really run up a lot and the stock price will run up a lot. And in the short term, there may not be any steam left. I think once you see the growth that they've been showing over quarter-on-quarter and year-on-year basis, and you extrapolate it to the next 2, 3, 4 years, I think you still will get some upside in these stocks. So, one can wait for opportunities, and whenever there's consolidation, there's some correction in these stocks, I think one can still look at investing in these companies.
All right, there you have it. Well, potential to buy into it when we in fact do see a little bit of correction here as well. Kunal, I'm going to take up Dixon Technologies with you because that perhaps is the largest one of them in the pack. Well, technically, how is this looking to you? Whether or not there is an opportunity to go long or short, given this one is also in the futures and options space?
Absolutely. So again, sideways consolidating since 16th of September. So it's been almost 11 calendar days. The support is placed at around 14,000 to 13,850 levels. And on the higher side, we have a minor resistance, which is 14,375. I think with the stop loss, one can definitely initiate a buy. The only reason being, this is consolidating with the positive bias. So yes, on the hourly chart also, it's looking positive. On the lower time frame, that's on 15 minutes charts, also looking good. So with the stop loss of 13,800, one can initiate a buy. I think the momentum may just pick up anytime soon. So short-term trading ke liye bhi this counter looks well poised.
All right. Kunal, a final question for you here is also what you're doing with the Bank Nifty specifically for this upcoming week. One, what is your overall position and what is your stance? And if you were to play options, because that's something our viewers keep asking us about, how would you deploy options keeping the Bank Nifty in mind at the moment?
So definitely, Agam, the trend has been really robust and very strong. In fact, previous week, I was very skeptical about the next move. But as of now, because Bank Nifty futures has not even reached the bottom of Wednesday, I think it's going to rally even for the next week. So the support which I'm sharing with viewers for the futures level is 53,850 levels. And the resistance, let's not even mark as of now, that's absolutely trending. So with that support, one can initiate long on Bank Nifty. I will not be keen to buy at this point in time. If the Bank Nifty opens flat on Monday, I think with that mentioned support, we can initiate a trade. For options, we'll just have to wait for Monday first half an hour to 45 minutes. If 53,800 is taken care of, then I think the bull call spread can work really good for the upcoming weekly expiry.
All right. Niraj, also a question for you on the real estate pack here, because we're starting to see a little bit of strength return to a lot of these prices after perhaps a little bit of sideways movement here. In general, are you bullish on the real estate sector given the fact that it's already run up quite a bit? And what is your overall opinion?
Yeah, actually, as far as the prices were concerned, like especially I'm from North, there was some prices were stabilizing and they were stopped going up as far as the properties are concerned. But I think after this consolidation, people are really looking forward to the festive season. So there is expectation of a pickup happening there again, prices firming up, demand being strong. I'm still positive on the real estate sector, whether it's specific north-based companies like DLF or Bombay companies like Oberoi Realty. I think these companies are doing well and they have a good pipeline of launches also going ahead. So I think I would still keep a constructive view as far as real estate is concerned.
All right. While we are also talking about the real estate sector, want to perhaps maybe take up just one final question in terms of stocks which are to do with energy. And today, once again, we do have a note on the power sector where at least Morgan Stanley is talking positively when it comes to names like NTPC and JSW Energy and what have you. Niraj, anything that you're spotting here? Of course, the theme has been green energy, solar and wind largely, but any opportunities on your radar right now?
Let's see, most of these companies have run up a lot, whether it's JSW Energy, whether it's NTPC. One can stay invested if you're invested because I think still energy sector, a lot of investments is going into green energy. Even JSW is spending so much on renewable energy. NTPC definitely is spending a lot. So I think that because of that expenditure and that capex, the future also next 2-3 years look promising for this sector. But of course, the run-up has happened, so one may not get that return which we got in the last 1 year. But I think for a person who's holding it, should keep holding on to these energy names.
All right. Well, on that note, thanking both our experts for joining us and taking us through their views in the markets and, of course, helping us with several questions which have been poised not just by us, but also a lot of these market participants who we have had the opportunity to interact with. Well, just about a minute left for market close, not just for today, but for the entire week. Yes, it is a Friday. Exciting times for many. And we're ending on a very subdued note when it comes to the Nifty. It does seem like we're going to close marginally in the red. The Sensex, the slightly deeper red of around 0.3%, and the Nifty Bank is down around 1%. So profit taking clearly across the three benchmarks. Have we seen outperformance in your broader market indices like the mid-cap and the small-cap index? Potentially, but just by a bit. Actually, we have seen the mid-cap, give away to a certain extent in the last 15-20 odd minutes, it seems. And small-cap is holding on to its flattish movements. But let's talk about the Nifty then, the heat map in general. And more gainers than losers, in fact 30 uppers and 20 downers for now, with BPCL as well as Reliance Industries leading the oil and gas space higher, Cipla and Sun Pharma leading the pharmaceutical space higher. And among stocks which are under pressure would include something like an HDFC Bank, Power Grid and Bharti Airtel. In the broader markets, let's once again pull up all the big movers and movers and shakers. And in fact, if we can, there you have. So we have Lakshmi Machine Works, Sri Renuka Sugars, Kalpataru Projects, Pfizer, all of them advancing in trade. What's weighing down on the indices, on the other hand, is Shoppers Stop, Macrotech Developers, Home First, and JSW Energy. And finally, let's take a look at the advanced decline ratio to see whether or not it has in fact been positive. Well, it does seem like it's turned for the worst towards the end of the sessions, and we now have just about one gainer for one loser. All in all, it's been a fairly stable week of trade. The markets have touched lifetime highs and then followed through with consolidation. And the question now is whether or not we in fact do get into consolidation move, a sideways movement, range-bound trade for benchmarks going into the next week. Well, all those questions answered as we move into trade next week. But for now, it's a wrap on India Market Close. But don't go anywhere. Lots more lined up on NDTV Profit. So keep watching and stay with us.
The benchmark snapped 6-day winning streak but end the week higher. Most sectoral indices close in the green with oil and gas fueling the rally. CMD Ajay Singh says he will ensure the complete revival of SpiceJet. This is an NDTV profit exclusive. Swiggy files an updated DRHP for 10,700 crore rupee IPO that brings valuation up to 83,000 crore rupees. But how does it fare with its peer Zomato? We bring you special analysis. And it is an NDTV profit impact. Ola Electric launches hyper service aiming to double its service centers across the country. This is after NDTV profit conducted an independent investigation into Ola's servicing disaster. American telecom major Cisco launches its first manufacturing facility in Chennai to help in manufacturing, routing and switching products. The facility aims to create 1,200 jobs. Samsung is facing one of the biggest labor protests in the country, with over half of its workers protesting since early September over wages, job security and overall working conditions. We get you a ground report. The big discount war by e-commerce giants Amazon and Flipkart kicks off today. We detail the journey of a package from store to customer. Former Defense Minister Shigeru Ishiba is set to become Japan's new Prime Minister. This was his fifth attempt to lead the ruling Liberal Democratic Party. The victory caused the yen to weaken, although it recovered later in the day. Good evening and welcome. You're watching Profit 360 on NDTV Profit and I'm Nupur Talwar Suri. Now the benchmark snapped a 6-day winning streak but closed the week in the green. Nifty Metal shown as the top sectoral gainer for the week, surging about 7%. Agam Vakil joins us with a wrap of all that's happened on the Lal Street.
Well, it's been a quiet end to a great trading week for Indian equity markets, where we saw the Nifty as well as the Bank Nifty move and touch new lifetime highs. As far as Friday's trade is concerned, marginally in the red for both the Nifty and the Bank Nifty. In fact, Bank Nifty took a cut of around 1%. Even in terms of the broader markets, what we in fact did see was a little bit of a step back. The mid-cap index currently marginally in the red as well, and as was the case for the small-cap index too. Let's take a look at the constituents of the Nifty, the heat map, where you will see that there were more gainers than losers. Overall, in general, well, we did have gains in BPCL and Reliance Industries, which led the oil and gas sector, and of course the pharmaceutical sector, which was also doing well in trade, largely led by names like Cipla as well as Sun Pharma. On the losing end, we had some amount of weakness in Power Grid and Bharti Airtel. Moving on and talk about the broader markets, let's take up the advanced decline ratio first. And as you will notice that while we did start the day with a lot of positivity, we eventually saw a convergence of the green and the red line, with just about one gainer for one loser ending this Friday's session. As far as your top gainers and losers are concerned in the broader markets, let's pull that list up as well. Well, Lakshmi Machine Works stands out along with Sri Renuka Sugars and Kalpataru Projects among gainers. And we had weakness in Shopper Stop, Macrotech Developers and Home First along with GSW Energy, which did wilt under pressure to a certain extent. All in all, however, it was certainly a very good trading week. And the question now is, do we continue to see benchmarks make new lifetime highs as we move into next week? Or can we expect a bout of consolidation? Well, that's a wait and watch.
All right. Now, earlier today, we caught up with Edward Yardini, who explained why he prefers India to China.
China has some real serious challenges with demographics. Obviously, India doesn't have that problem. India has a much younger population, whereas China exacerbated its problems with the one-child policy. Then now they're paying the price for that. And then, of course, it's still an authoritarian government. It's not a democracy like India, and they do change the rules, and they make doing business there very very difficult. So I'm not convinced that these measures that they're taking are going to have immediate or even medium-term consequences on the positive side. I think India, to me, still looks better than China.
Well, another big voice on the channel today, NZ's chief economist Richard Yetsenga spoke about why he's bullish on the Indian economy and the factors that will drive momentum.
Emerging markets like India have been through the most difficult part of the cycle. Aggressive Fed tightening, structural China slowdown. If there was going to be an emerging market problem, the intersection of those two things should have given us one. And the reverse has happened, actually. Emerging markets have gone from strength to strength. You know, I can't recall a time in my 20 years coming here that the external perception of India has been so strong. So if you think about why that is, financial sector resilience means when the Fed tightened, it didn't have all those uncomfortable financial fragility flow-ons into the Indian economy. Let's all remember 10 years ago, India was one of the fragile five. Now it's one of the fantastic five. I'm not sure what the other four are, but we can work that out.
Well, and on to an NDTV profit impact story. Ola Electric has launched hyper-service. Bhavish Agarwal on social media platform X said that the firm aims to double its service centres across the country. Now, this is after NDTV Profit conducted an independent investigation into Ola's servicing disaster. Tushar is joining in with more. Tushar, give us more details about how Ola plans to now change its servicing.
Yeah, hi Nipur. So Bhavish Agarwal, the chairman and promoter of Ola Electric, has actually put down a 4-point plan as of now on X to fix the service-related issues that the customers are facing. He also made a mention of the number of stores the company has, about 800 in the country, but the service stations are actually about 500. The aim is to double that to about 1,000 by December 2025. So the 4-point agenda to fix the after-sales issues are everywhere, anytime service network, essentially doubling the service network to about 1,000 from 500 at this point of time. Deeper penetration of EV across India. The company plans to train about 1 lakh mechanics in handling and servicing an electric scooter. This will be achieved by December 2025. A quick service guarantee. The company is also assuring a one-day service for its customers. If there is a delay, then they'll actually provide an alternate vehicle for the customer to use till the time that issue is not rectified. Agarwal has also mentioned about an ownership experience that will be powered by AI for proactive maintenance as well as remote diagnostics. Remember, the software glitches that have happened in the Ola scooters the scooters had to be taken to a service center to fix them, as the updates were not over the air or OTA. Nupur.
All right. Thank you very much, Tushar, for joining us with those details. Now, moving on, SpiceJet has been in the news for a while now as it battles to pay dues. In an exclusive conversation with NDTV Profit, the CMD Ajay Singh spoke about the low-cost carrier's revival plans. The airline service plans to expand its fleet from 25 to 100 by the end of 2026. Now, only last week, the carrier had raised 3,000 crore rupees via a QIP to tackle its ongoing financial challenges. Here's what Singh had to say to criticism faced by the company on its revival plans.
We have proven you guys wrong. We've proven your channel wrong repeatedly, because you guys have said so many times that SpiceJet will not survive. And we've shown you every time that you are wrong. This is an airline that refuses to die. It will not, and it will be a vibrant player in the Indian aviation space again. There is absolutely no doubt of that. Well, the primary use of the raise is to increase capacity, go from the current 25 aircraft that SpiceJet is flying back to a 100 aircraft airline in the next 2 years. That's the primary objective of the raise. We were already close to 100 aircraft airline in 2019, and it is our intention to get back to being a 100 aircraft airline over the next 2 years. That's the primary objective. Of course, another objective of the raise is to clean up the balance sheet, clear up whatever is due and payable, settle with all our partners who are owed money primarily for the period when aircraft are not flying during COVID and during the grounding of the MAX aircraft in 2019. and for 3 years thereupon. So the idea is that we clean up our balance sheet, restructure all existing liabilities, and have the space and the strength to quickly grow back into being a 100 aircraft airline in a market which is absolutely booming.
Now, Swiggy filed an updated DRHP for its 10,700 crore IPO. But how does Swiggy stack up against its listed peer Zomato? Agam brings us a detailed report.
IPO that a lot of investors are waiting for. Now, in terms of the latest deals that have happened, and this is of course the pre-IPO deals that we're talking about, that's happened somewhere in the range of around 330 to 375 rupees per share. What does that peg Swiggy at in terms of its valuations? Well, a little less than $10 billion, or for that matter, a little less than 84,000 crores, or 83,000 crores to be precise, at 375 rupees per share. But moving in, as far as your IPO is concerned, they're expected to raise about 10,700 crores, and this will be split between a fresh issue, which will be worth around 3,750 crores, and a little less than 7,000 crores will be an OFS. This is as far as its own valuations are concerned, but how does that compare to Zomato, which is in the listed space? So firstly, we must realize that Zomato will have a listing premium and Swiggy will have an unlisted discount. Still, if you consider 85,000 crores as the valuation for Swiggy, and if you consider the sales for the year gone by, that comes in at around 11,000 odd crores for Swiggy. Well, the price to sales ratio stands at around 7.6 times. In comparison, Zomato's market capitalization is well over 2.5 lakh crores, and it's in terms of its annual sales, it's not too far away from Swiggy. It's about a little over 12,000 crores. Which actually pegs its price to sales at 20.6 times. So as you can see, in terms of price to sales, the ratios, in this case, there is a very wide gulf between that and Swiggy and Zomato. And as I continue to mention, besides the fact that we are looking at that listed premium for Zomato, we must remember that Swiggy is looking at a deep discount also because of the fact that it still needs to be profitable. It is on the path to profitability. On the other hand, Zomato has starting to turn profits on a little bit more consistent basis. And well, we must remember, of course, that Zomato is also listed, which is why you get that listing premium. But what does the management have to say when it comes to Swiggy in terms of its outlook going forward? So when it comes to the food delivery business, well, on a year-on-year basis, going in, Swiggy is expecting about 18 to 20% growth, and this growth will largely be driven essentially by addition in new users. And as far as this grocery delivery business is concerned, that's where we are looking at a staggering growth of around 60%. But of course, this is where they're also working on a relatively lower base, which is why this number will look a lot higher. The question then is, in terms of a pre-IPO allotment, and if you're one of those investors who have in fact managed to get their hands on Swiggy shares before its IPO, what are the risks that you are keeping an eye on? A listing delay, because so far we only know that the DRHP has been filed, but as is the case for many IPOs out there, you never know, this could be a possibility, which means that you may have to wait for a little longer than what you may have anticipated. A downturn in listed market valuations. Now just let's say suppose tomorrow, if you do in fact see a sharp correction in Indian markets, in Indian equity markets as a whole, you may in fact see a correction in the valuations at which the Swiggy IPO may come. And of course, let's not forget, if you are an investor in Swiggy pre-IPO, there will be a lock-in of around 6 months. That means you will not be able to sell shares when Swiggy in fact lists, but 6 months post that. So those are just some of the factors that you need to keep in mind when it comes to Swiggy and its upcoming IPO that stands to hit the exchanges over the course of the next few months.
Well, the labeled dispute at Samsung's electronics manufacturing facility in Sri Perumbudur, Chennai shows no signs of resolution. The company has reportedly warned striking workers, implementing a no work, no pay policy and suggesting potential layoffs if the strikes continue. NDTV Profit's Haripriya is on the site to provide an in-depth report from the protest site.
We are here in Sri Perumbudur, a town near Chennai in Tamil Nadu. This is a special economic zone where factories of multiple international companies are housed. One among them is Samsung, who is currently facing a rebellion from its workers. About 100 to 200 meters away from here, multiple hundreds of workers of Samsung have put up a tent and are protesting. This protest has been going on from September 9th. Today marks the 18th day of their protest and they continue to do so. Now what they demand is they get better wages, they get better working conditions, and their union gets recognized. So far, they have not reached any resolution with the company, and what we hear from the company as of now is that they are willing to talk to workers individually, but they do not want to engage with a union. But we spoke to the union leader here and multiple workers. So far, what they complain is that they have not heard anything from the company material in terms of getting to a resolution and solving their problems. And they also complain that the government has not made any efforts or paying enough attention for this. Samsung's capacity production was actually reduced the day the protest started. But now since the protest has been continuing, they've hired some temporary workers to keep the place running. And they have even sent actually the show cause notices to these workers to ask them to come back. If they do not come back, then they will face wage cuts. However, the protesters have not budged because of this. They continue to protest, and they say that until a proper resolution is reached and they get what they want, they won't be moving back from this.
Well, the American telecom major Cisco has started its first manufacturing facility in India. The company's production site is based in Perumbudur in Chennai and is expecting to drive $1.3 billion in revenue with this investment. NDTV's Haripriya caught up with Cisco's executive vice president and a chief product officer to know more about the plant's prospects.
This has been in the works for a while. Chuck Robbins, our CEO, had met with Prime Minister Modi in several months ago and made sure that we had made the commitment that we're committed to the growth of India. And what we've done over here is not just made sure that the facility can manufacture for the local market of India, but we're actually taking our first product line and manufacturing so that we can make sure that we can also have export. And we're waiting for the export control licenses, but that's something that we'll be looking forward to. And this is the first product that we're bringing to the market over here with local manufacturing. But our goal is, depending on the success of this, that we're going to have many product lines that we can bring over here. So our goal is over the course of the next next couple of years, we would have about $1.3 billion of revenue that can be generated from the facility. It's also over the next year, I think we want to make sure that we get to about 1,200 or so employees with our partner Flex.
Now, festive cheer has arrived early with the big discount deals on Amazon and Flipkart. Consumers have begun to rush to snag deals on everything from electronics to fashion. The upcoming October-December period is critical for retailers as festivals from Diwali to Durga Puja drive up sales, now contributing to significant portion of annual revenue. Consumers are embracing the festive spirit with their proactive shopping behavior, signaling an even stronger performance ahead. Now, leading smartphone brands like Xiaomi and Samsung are capitalizing on the moment, slashing prices and pushing hard to clear stocks while encouraging retailers to meet bold targets. E-commerce heavyweights Amazon, Flipkart and Myntra, along with rapid delivery services like Blinkit and Zepto, are leading the charge, rolling out discounts as high as 80% with ultra-fast delivery options. And Rishabh Bhatnagar now joins in to provide a detailed overview of how the Amazon Bengaluru Fulfillment Center functions.
I'm joined by Abhinav Singh, Vice President of Operations at Amazon India. Thanks so much, Abhinav, for taking the time out. Firstly, for our viewers, just lay the context a bit. explain to us where an FC or a fulfillment center stands in the entire processing of orders?
So we are at the inbound dock. This is where we bring in the inventory. So these are sellers from across the country who are sending the inventory to our fulfillment centers so that it can be stored in our fulfillment center, ready for customers to order. Yeah, so you saw us inbound where we got the inventory from our sellers. This is where we keep it ready to ship for our customers when they order. If you see what we call bins, but basically these are independent locations, all are marked with a barcode. So when a customer presses buy on the website, like when you press buy, there's a real-time computation that happens to determine which is the closest fulfillment center from where we can send the item to the customer. The associate comes to the right location, scans the location, takes the product, checks all 6 sides to make sure that everything is proper, it's not damaged, it's in good condition, and then takes it and sends it to where it is packed, where we'll go next. Akshata's handheld device has just gotten the orders which are being dropped by customers, placing them from across the country. She's got the location on her handheld scanner as to where to go and find the product. She looks at the product, she scans it, she looks at all 6 sides of it to make sure that it is in the right condition, and then she puts it in her tote to be able to transfer it to the pack station. So you saw those picking, Akshata over there, she put the package in the yellow tote. Those yellow totes are carried by the conveyance system, which you see in the background, and brought to the pack station. At the pack station, when they scan the item, the computer screen in front of them tells them the right box to select. This is based on a machine learning algorithm. Once the order is packed, we decide to label the package. At the time of labeling, there's a real-time decision which is made that we gave a promise to the customer. In order to keep that promise, what is the best mode of transportation? And basis that, the label is generated and put on the package. From there, it comes over here and gets packaged in these tertiary containers that you see over here. Based on the customer, where they are with respect to the product, what is the fastest mode of transportation to get it there, that's how the decision happens, and that's how the journey goes from here on.
Well, after a tightly contested leadership race, Japan's former defense minister Shigeru Ishiba is poised to become the country's next prime minister. Now, this marks the 5th and what Ishiba has declared as his final attempt to lead the party. The 67-year-old political veteran edged out hardline nationalist Sanei Takaichi in a dramatic runoff, capping one of the most unpredictable leadership races in decades with a record 9 candidates. In response to the news, the yen dropped, although it did bounce back later on Friday. Well, that's all we have time for right now on this edition of Profit 360. Thank you very much for joining in. And as we sign off, enjoy this charming moment of Union Telecom Minister Jyotiraditya Scindia greeting a robot during his trip to Chennai. He says namaste, and the robot reciprocates with a respectful gesture.
Hi, Radha. How are you, Radha? You ready? Why are you looking so loud?
It's a question you may have wondered. Who is the best investor out of India over the last 40 years? Not merely the one who has made the most amount of money, but the one whose ideas, insights, and influence have been stamped on the market and market men. Well, it's my great pleasure to have in studio today a man even old-timers call an investor's investor. Hello, everyone, and welcome to a new episode of Icons. I'm your host, Ramesh Damani. He is an IIT-trained chemical engineer who found he enjoyed common stocks more than a chain reaction. He is a Stern School New York MBA who decided that his Karm Bhumi was not Wall Street, but Dalal Street. He was a passionate India bull way before the term became popular. Intellectual, intuitive, imaginative, and of course, iconic are some of the adjectives used to describe him.
The ability to see patterns, important through this whole sort of mosaic of scattered data points. I was watching Dhoni and I'm conversing with him. The ball, there's a television there, the camera, someone's bowling. He would see the ball and he'd say, "A 4 hone wala, 6, out, out, out." I visited the bathroom of every company I visited.
You famously mentioned that, yes. Kung Fu.
Peace, evolution, enlightenment.
Brijmohan Lal Munjal.
Legend.
Madhav Dhar.
Visionary, high energy, great leader of people.
Your favorite city in the whole world?
Mumbai.
Really? Your ultimate comfort food?
I'd say a dosa.
Please help me welcome from Sethi Capital, Vinod Sethi. Vinod, thank you so much for joining us.
Thank you, Ramesh. Very kind of you to use those poetic words.
I've always admired you, Vinod. But
that's nice. Yeah.
Let's go back to your start. When life starts, it doesn't come with a manual, but it comes with a mom. How important was mom in your life, and what did she teach you?
Mom was very important. I'd say my only hero is my mother.
Really?
Yeah. So, and more so because
she was a single mom.
Yeah. So I lost my father very early. So my mother really brought me up.